All right. Hello everyone. Thank you for joining on this another live stream. This is the 20th of March and this is on Saturday. So happy Saturday everyone. Thank you for joining on this relaxing Saturday today. So I'm in Dubai right now and I'm staying at the hotel, and every time I start this live stream I see the beautiful sunset over there. On this side, beautiful sunset into the sea. So this is a bit nostalgic. I like this this time of day right now. So this is 6 p.m. in Dubai time right now. Okay, so thank you for joining everyone. Good to see you. Today is Saturday and the market is closing. So I just wanted to talk about whatever the topics it might be. I want to talk about the loss today. I want to talk about the concept of loss and how I think about the losses. Because this week or last week was ranging. All the JPY pairs are ranging now, retracing. So although we saw some trends from the beginning of the March, now it's retracing backwards. So you might have some losses this week. You might have stop loss this week. So that's why I think it's a good timing to talk about the losses and how we can regard the losses while you are taking trades. So let's see. Let me talk about the chart. All right, let me just quickly set up everything here. All right, hello Karima, thank you for joining, and Ruslan, thank you for joining too. Okay, Ruslan says, I just paid a KTS community membership this afternoon but can't access to Discord. So you can access to Discord on my Ichimoku community. So please come to my Ichimoku community website. You can click on these services and Ichimoku community. And once access to this community page, then scroll down and you can find the link to join Ichimoku Discord. So this is where you can join. Please try, and if it still doesn't work, then please write me an email. Please contact me so that I can help you too. Alright, Asif, thank you for joining. And Kasiya, good to see you too. Happy first day of spring. Yeah, that's true. Spring is now here. So we have nice cherry blossoms right now in Tokyo. So that's one thing I missed here during my stay in Dubai. Alright, H. Bashar, thank you for joining. And Yorun, thank you for joining too. Good to see you. So Yorun has been my moderator in my community. And you can find his introduction. If you scroll down my website, and you can see his introduction here. So this is Jorn from the Netherlands, and he's a drum player. And also there's another moderator whose name is Maru, and he's also moderating my community on this public and membership community. Okay, good to see you everyone. Happy New Year, Happy New Spring, good to see you. Ryder Jack, Gabriela, thank you for joining too, good to see you. And Noel, good to see you too. Beautiful sunny today. Alright, good to see you. Alright, Tommy Lee and Tam Roy. Silicot, thank you for joining too. And Robert, Don Don, number 9, thank you for joining too. So I just uploaded a video just today, just earlier, from my followers. So I have the second channel. You can access this second channel from the link on the description below, and you can see what kind of room I'm staying right now in Dubai. So yeah, you can enjoy these videos during the stay in Dubai. And thank you for those who commented on these videos. I will keep posting more videos in Dubai. Actually, I took more videos, but I haven't been able to edit them yet. So once I edit them, then I will upload these videos here. So you will see more and more coming on my second channel too. So this is just for private. This second channel is just for private life of mine. So I don't really talk about the tradings, but I talk about mainly about myself and the purposes, the three reasons to move to Dubai. I talked about it 3 days ago, and I talk about my personal life things. Okay, so yeah, let me talk about the loss today because we had some retracements last week. So for example, USD JPY. All right, I see more traders coming in. Thank you for joining, everyone. Sankar, Muchina Frank, thank you for joining. Good to see you. So speaking of the losses, I think losses are necessary to run profits. I mean, I think losses are necessary to make profits. Without any losses, you cannot make profits. That's the reality. Because if you talk about the loss or the risk, you know, everything. If you do anything, there are some risks on doing them. So for example, if you drive a car, then you have a risk of the accident. If you are flying on the airplane, you have a risk of airplane crash. Or if you do anything, there is always a risk. Even if you drink water, you might have a risk of having some issues or anything. So the risks are everywhere. And especially in Forex, the risk is become painful because it involves money. So let's say you pay so much. Let's say you pay $100 or $200. You have to pay $300 to buy food, for example, to go to a restaurant and buy food, and then let's say the taste is not that good. Then you have to kind of speak about the manager of the restaurant and say, oh, this is not good food, so I need rebate. Or you have to switch the dish or the food, for example. So I think this is also the risk. Especially if you go to the restaurant first time, you never know what kind of food there will be. So I'm in Dubai right now, and I explore new restaurants in Dubai, and I enjoy so much. But sometimes I'm a bit scared because I'm not sure what kind of food they serve, what kind of food it is on the menu. I see menu, I see these descriptions, but unless I taste it, I never know how the taste tastes like. So that is a risk. So, but if it's acceptable to you, then you can still take it. And if it's not, then you simply don't order it next time. So same is true in Forex trades. I myself has been a Forex trader for the last 7 years, or for the last 8 years. I have been a Forex trader, and every time I take trades, I think about the risk and I think about the loss. And I know that the losses do happen. Now I know that the losses do happen, and losses are necessary to take trades to run profits. So coming back to this chart on dollar JPY daily chart, if you see the range market like this, then although you see Kumo up, Kijun Sen up in this condition, the market might go down. And the probability for the market to go up in this case is relatively lower than you see the market like over here when you have more stable and strong uptrend. But even so, even if you take trades over here in this area, you might have some small losses along the way on these lower time frames. So every time you take trades, I recommend you to take trades with a 2% risk per trade. So that means every position has to have 2% risk to the stop loss. So let's say your trading account is $10,000. Then every time you take trades, it should be $100 to the stop loss. So you have to calculate it manually. You have to calculate the lot sizing according to the stop loss pips manually every time you take trades, and that's what I do too. So I usually take trades. I usually take 2 positions at a time or 3 positions at a time and take trades. And if I have 2 positions, then each positions have to have 1% risk, and as a whole it should be 2%. And so let's say I take a buy on the USD/JPY and the price is not going up towards my direction, and if it's ranging after I took that buy, and if I cannot move the stop loss to break even, then I cannot trade other pairs because I'm still risking 2% on this particular pair to take trades. And let's say while taking up positions on USD/JPY and while I'm holding it without being able to set up the break-even line, then let's say I see other pair, let's say pound JPY to be trending, and then I will exit on this dollar JPY and look for confirmations on pound JPY and take another 2 positions with 2% risk as a whole. But I don't take 2% on USD/JPY and 2% on pound JPY. I don't do that. I never do that, because in that case, in my whole portfolio, it becomes 4% risk as a whole, and it's risky for me. So, and if you take 3 positions, then each positions have to be 0.33% on each positions. So, so this is how you can manage these lot sizings. But anyhow, you have to manage the stop loss. So for example, if you take a buy over now, then if you look at the 5-minute chart, and let's say you take a buy right now over here, then the stop loss will become below the previous low, which is at this level, and I manually hold on, where is it, the drawing tools, let's see, oh, there you go. Okay, so I take the this measurement tool and I drag it all the way down, and so this is my stop loss, 8.7 pips stop loss if I take this previous low. But for me, this is a bit too tight. Usually I have in between 15 to up to like 35 or 40 pips of stop loss, and 8.7 is too tight for me. So I will take, in this case, the second previous low. In this case, the second previous low will be here all the way, and this is, how many pips is this? This is 25 pips of stop loss, which is decent. So if I take a buy right now, then I take this price level, 108.60 as stop loss, and expect the market to go up continuously like this way. But once it goes down, then I will exit at some point. And usually I don't keep holding it until the market hits a stop loss. While I'm in the position, the market might gradually going down this way, and then I will exit at some point. If I see, for example, reversing the waves consecutive, then I will exit soon. Or if I see some other reversal signals like engulfing candles, or if I see these potential retracement confirmations, then I will exit. Because what I expect from here is that I expect the market go up like this way, and I expect the market to go up on this N wave from here. And the N wave could be like this way too, or this. But one thing for sure is that if the market breaks the previous low at this level, so let me get this solid line. If the market breaks this support line, then I will exit in this case. So most likely, if I take a buy right now, then I will only risk less than 1%, because this 25 25 pips is 2% risk per trade, and this is above 50% level, so this is less than 1% risk per trade for me. And until I set the break-even line, I keep watching the chart and I keep an eye on the chart. If I'm outside, then I check charts from mobile until I set the break-even line or exit before the break-even line is set. Okay, let's see. Let me come back to some comments here. Number 9. Yeah, there was a big earthquake today. Yeah, in Sendai area, in kind of north part of Japan, there was a big earthquake just earlier. I hope you're okay. I hope you're okay. Don't feel like in Osaka. Oh, Osaka was not really affected, but Tokyo was shaking. Yeah, it was like M7.1 or 2 in north part of Japan. It was huge earthquake today too. Hello Marianne, thank you for joining. And Hapa, Rico, thank you for the super chat. Hong Kong, thank you for joining. Good to see you here. It's been a while. Alright, Asif says, the only person who does not fail, lose are those that do nothing. That's true. If you do nothing, then you don't lose. You don't win, but you don't lose. So that means if the market is ranging, then that's a time when you don't do anything. If it's trending, then you take trades. So you have to know when to take trades, when not to take trades. And this week was the week that we have to be staying away from the charts. It was ranging basically. Alright, Krish, sorry, thank you for joining. And Sakib, good to see you. Can you please see pound USD 1 hour chart? Yeah, let's check that one later. Can you explain about Ichimoku C-clamp calculation? I don't use C-clamp calculation, so I'm not sure, unfortunately. Dondon says, Teacher K, kindly teach us how much I will put 2% risk for each trade in amount of money. So 2% should be to the stop loss. So if you have 25 pips of stop loss, then you calculate it depending on your account size. So that if the market goes backwards, then you lose $20 if your account is $1,000. If it's $10,000, then this should be $200. If it's $100,000, then this stop should be $2,000. 2% risk per trade. All right. Yeah, and Yorun kindly share the website from the Baby Pips, so you can use that babypips.com position sizing, and you can calculate it manually too. Alright, BLO, thank you for joining. And Mo7 says, hi K-san, how should I raise my trading performance? There are two things. It's either you decrease the loss or increase profit. Win rate is not really matter. It's not really important. I think the risk ratio is more important than the win rate. T20 Trader says, your CAT-JPY peak call was brilliant. I peaked on 18th March, one day earlier than 19th March. Yeah, so I made an analysis on CAT-JPY and it was retracing, so yeah. Let me talk about a couple of other pairs and continue to talk about the stop loss today. So CAT-JPY, and also I will cover the pound USD soon. So CAT-JPY daily chart. This is on a time cycle of 24. So the market is retracing backwards now. and it's going backwards from Thursday. However, I still expect the market go up this way because this is above the Tenkan-sen, and the market can go up on this N wave bullish. This is uptrending as per Ichimoku. Kumo's up and the Kijun-sen is up. Chikou span above the candles, so this is bullish. So if it goes up this way continuously, and if the market breaks these forecast lines, the market could go up all the way up until around the 20th of April, because this is in 24 or 23 time cycle on the highs, on the swing highs. So I would look at the 1 hour chart in this case, and in 1 hour chart is flat ranging, or this is more of the downtrending, so this is not the good timing to buy. So in this case, I wait until the price comes above the Kumo, and Kumo should be twisted bullish, and the Kijun-sen will come above the Kumo too, and Chikou span breaks the candles. Then I will look for the buy chance then. Otherwise, I just keep holding it. I just staying away from this chart. And that's why I say that this is not a good timing to buy, because the market can go down continuously this way. And we never know, because this is the divergence. Daily chart is uptrending still, but 1 hour chart is now downtrending. So this is against with each other, the direction. So in this case, this downtrend on 1 hour chart by Ichimoku can be fake, and it can go up still continuously. Because I always follow the major trend direction, so if it goes up, then that will be a buy chance. Otherwise, I stay away in this kind of condition. Alright, Manshif, you're welcome for the video live stream. Alright, XAU USD. Yeah, let me take a look at it if I have time today. Dondon Saitun, you're welcome. Alright, Maziar says, what is the best Ichimoku technique for trade? Ichimoku offers many different trading styles, but the one thing you can follow is the Kumo and Kijun-sen angles. So for example, here, if you see the Kijun-sen is up, and the angle of the Kijun-sen is up, and if you see the Senko span B or A is up, and then Chikou span above the candles, and this is uptrend confirmation. So you can start from this strategy and follow this uptrend as long as Kumo and Kijun-sen goes up. And basically that's what I do every time I take trades. Alright, Amin, thank you for joining here. Good to see you. Okay, looks like the sun already went down. So getting ready for the night view here. Let's see. Tommy Ray says, if you enter an exit trade in 5:15, this means you are an intra-day trade, although you take confirmations on H1 or 4-hour chart. Is it correct? Yes, it's correct. And that's a good question. So I claim myself as a day to swing trader, but when it comes to exit, sometimes I scalp. So but in terms of target, I follow a daily or 4-hour chart. So in terms of following the trends, I'm swing or day. But when it comes to exit, I focus on 5:15 and I exit very soon. In that case, I will exit maybe for the next couple of minutes, and that might be a scalping way. So let's say on this CAT JPY in H1, it's flat ranging, so I don't look for the buy chance. But let's say I see daily chart uptrending and also mid time frame also uptrending too. So I will just go back the chart a bit like this, So let's talk about the market on this day. So this is the 12th of March, and the daily chart is beautiful uptrending, and I think 1 hour chart is also uptrending too. So this is 1 hour chart, and you can find that this is also uptrending. So in this condition, I look for the buy chance in lower time frames. So let me take the 5-minute chart to be more practical. So here the market is retracing backwards, but I see a beautiful gold cross of stochastics below 20 level. So this is a nice confirmation. And also I look for 2 other confirmations, and that will be, in this case, the Canada trend line breakout. So I draw the Canada trend line like this way, and once it breaks, that will be another confirmation to buy. So that is another confirmation. And then I take the Fibonacci level. So I see this as an N wave like this way. So for the market to go up continuously, I want to see if this pushback is decent or not. And in order to see this pushback is decent or not, I take the Fibonacci. So I take the Fibonacci in 5-minute chart like this from this N wave, and I see this 61.8% support. There's a support, there's a double bottom. So I expect the market to go up from here once it breaks this descending trend line. So let me just move one more candle or couple of more candles and see if the market breaks and stochastic gold cross happens. Oh, by the way, if I open the chart and if I see the market as of now like this is what I expect in my head to buy. But if the market keeps going down this way, then I won't take a buy because I lose these confirmations already. So let's see. Okay, so it goes down. It broke the previous low, and now it becomes reversing wave like this. So this is when I don't take a buy. So in this case, I will be patient to wait for another confirmations to come. So let me just move a couple more candles here. Okay, so alright, so there is a breakout of the descending trend line, but now this Fibonacci is not working. It violated the 61.8%, so I will take this one out. So in this case, the only confirmation I found is the Canada trend line breakout. And so from here, what I expect is that, first of all, this is uptrending. So I expect the market to go up, and I'm looking for where to buy. So after this Canada trend line breakout, I will expect the market to be uptrending on the N wave like this, and I expect the stochastics to be gold crossing soon, and also I might see some engulfing pattern or pin bar pattern too along the way. So if I find another 3 confirmations, then I will buy. So let me forward the chart until I can buy, and then talk about the stop loss for today's topic. So there is a gold cross stochastics now, nice retracement. So it can be N wave. So this is nice retracement. So it can be N wave like this way. So let's see. Okay, so there is a N wave to form. So let me draw this N wave, and then band walking. Right now the price is in between deviation 1 and 2, band walking, a nice and stable uptrend confirmation in 5, and also stochastic gold cross already, and Canada trend line breakout. So I got multiple confirmations, so I would buy over here. So I take a buy over here, and my stop loss will be below the previous low initially, which will be over here. And I just want to make sure that this is not too tight, so I will have this major tool and drag it all the way down, and this is 17 pips of stop loss, which is okay. This is not too close, so I take the stop loss as here and expect the market to go up continuously. I expect the market to break the previous high and it goes up on the end wave like this way. So and before I take a buy, usually I reconfirm that the daily chart and mid time frames are also trending. So daily chart is still trending nicely, and 1 hour chart is also trending up nicely. You see Kumo up, Kijun Sen up also. So this is a good time to buy right now. And I can expect the market breaks the previous high on this bigger end wave like this way. So let me move the candles a bit more until I find the exit timing or break-even timing in this case. So once again, this is 2%. This risk to the stop loss should be 2%, and I take a buy over here, and I just monitor the market and see if the market goes upwards. Okay, this is almost at the same level as the previous high, and this is actually another frequently asked questions is that, do you take trades before the breakout? And my answer is yes, because I see the market as a bigger picture on the end wave, so I expect the market to go up on this big end wave like this, and that's why I take a buy before the breakout in 5-minute chart. So let's see. Let me enlarge the candles so that we can monitor closely. Okay, so I will just go fast like this. Okay, so this is still end wave in 5. We see end wave in 5-minute chart, so I expect the market to go up on the end wave like this way. But in case the market goes against the direction, start to reverse and backwards and reverse end wave, then I will exit soon. So yeah, I don't use Ichimoku, so I only use other tools on the lower time frame. So yeah, let me forward a bit more. Okay, now it's going down, but I still hold it because on the bigger picture I expect the end wave to form an uptrend. Okay, it's been ranging. I think this is not a clear breakout. This can still become a fake breakout, and this is not the beautiful end wave yet. So I make sure that the market goes up on the end wave like this and move the stop loss to break even. So my buy position is here. So let me move the candles a bit more. Okay, now it's ranging. Okay, Bollinger Band squeezing. Gold cross happens again, so it can go up afterwards like this way. So that's what I think it might also while holding these positions. Okay, so yeah, there is another breakout, but this is a bit gradual. But I do see end waves to form from this position over here. I see the end waves to form like this. So this is bullish, right? This is bullish confirmation. So if I see this bullish confirmation in 5, then I move the stop loss to break even like this, so that even if the market goes backwards, I don't lose. I think this is a good timing to move it to break even. So let's see. And I don't look at these dead crosses on stochastics while uptrending, because these dead crosses can be fake. You know, when you think about it, on this lower time frame, these stochastics or RSI, or MACD, whatever it's in this lower part of the chart, you cannot trust these dead crosses, because these dead crosses can be fake. That's why I don't even look at these dead crosses, and I don't stop trading by these dead crosses. So yeah, and I only trust these gold crosses to buy. So let me just forward a bit more until I exit. Okay, so in this case, the market went backwards. It didn't go up continuously, and then backwards, and this is my exit. So here, my result is break even. So this is basically what I do every time I take trades. And if I have the break even, then I look at the daily chart again by Ichimoku. And yep, daily chart is still uptrending. And 1 hour chart, let's see, I think this is flat now. Oh, yeah, 1 hour chart is still uptrending. So we can still look for the buy chance on the lower time frames. And the reason why I exit over here with the break even is that because the market is retracing in 5, and it's better to exit right now because the market can go down on this reversing wave like this in 5-minute chart. And usually the new trend starts from the lower time frames. So this might become, if the market goes bearish in a wave like this, then this might become a beginning of the downtrend, and this might become a head and shoulders as a result, and the market can go down continuously, and H1 becomes flat, daily chart becomes flat afterwards. So I make sure that I exit if I see these potential retracements, and I do this in 5 or 15-minute time frame. But let's say if the market goes up continuously, then I just follow the daily chart direction, and I keep trading until daily chart goes flat. So that's why I say in terms of the profit target, I follow the daily chart, but when it comes to risk management, I use the 5 or 15-minute time frame. And that's why overall trades, my profit factor, the risk-reward ratio becomes 1 to 3 or up to 1 to 5. Okay, let's see. Let me come back to a couple of other comments here. Melinda, thank you for joining. Good to see you here. Pound JPY, I think it's retracing backwards now. Yeah, JPY has been kind of strong last week, so we have to follow the daily chart trends. Okay, Ruslan says, don't forget to smash the like button before you leave. Oh, thank you for the reminder. So please, everyone, if you can press the like button, that would be great before you leave, so that it keeps me going. The time frame for swing trading will be weekly or daily chart, or you can take forward chart too. Mo7 says, what time frame is more reliable to identify direction when intraday trading? I think it will be a daily chart. Like I do daily or 4 will be more reliable than lower time frames. Alright, Simon, thank you for joining here. Yep. Milin says, if higher time frame is ranging but middle time frame is trending, can we take this trade? Can it be scalped? Yep. Let's say if you see 1 hour chart to be trending but daily to be flat, then yeah, you can follow the 1 hour chart trends. But there's a good chance, there's a higher chance that the market goes backwards, because 1 hour chart is lower than daily chart, and it could be ups and downs. So I recommend you to take only 1% risk if you follow the 1 hour chart trends. If you take daily chart or 4, then you can go for 2%. Okay, Christopher says, if I feel frustrated at break even most times because I feel I couldn't have taken a little profit. Yeah, initially I was thinking like that too. I felt the break evens, like on this particular trade, was frustrating because I have waited for a long time. I've waited for a couple of hours until the market hit the break even. So that was frustrating. But for now, I don't feel frustrated because this is something that it takes to make profits. And this is one of the things that I want to talk about today is risk management. Break even is okay because you don't lose, but psychologically you might feel it's a loss. So that's the problem. So yeah, in these conditions, you better be confident on non-losing trading style. So even if I don't, if I don't exit over here, if the market goes backwards, so let's imagine that my stop loss was over here. Hold on, I wanted to talk about the stop loss today. So I was hoping the market goes against me, but it looks like this is always going towards my direction. So let me just move the candles a bit more until I talk about the stop loss. So let's imagine that you're still holding the buy. Let's say I'm away from the PC and mobile. I miss this break-even timing, and I forgot, or I didn't move the stop loss to break-even in this condition. And let's say the market goes downwards. So let's see if it happens. Okay, in this case it didn't happen, it just went upwards. So yeah, it didn't happen. So I will exit at the break even and I re-enter the market. I re-enter the market at this band walking and gold cross stochastics and also previous high breakout. So I will take a buy at the breakout, and hopefully I can talk about the stop loss in this case. So the market goes against me. Okay, so I think this is good timing for exit. So if I see this, I will exit. And the reason is because now the market goes backwards. When I took a buy over here, I was uptrending. But afterwards, the market had double top, broke the previous low, and reversed in wave in 5. And that's why I exit over here too. And also we have the dead cross stochastics. So this is, I got multiple reasons for exit here. And in this case, I think I will only risk 1%. I take 1% loss for this stop loss. So, but this is necessary. I mean, this is still, important to be able to exit at this timing, because you don't want to keep holding the position until the market hits the stop loss. This is still 2% risk, but if you do this over time, it might become 4% on the next loss, 6% on the next loss. In 5 losses will be 10%. That will be too big for the loss. So that's why I make sure to exit before the price hits the stop loss. And in this particular case, this is timing. Hopefully, I was able to show this exit timing in this case. Yep. So, KK, thank you for joining. Shiji, David, Milind, you're welcome. T20 says, do you consider the pivot lines daily, weekly, monthly in order to decide on target or stop loss? I don't use pivot, so I'm not sure. I only look at the price action to take trades. Alright, Tommy Lee says, thank you, Kaisen, well explained, removed my confusion, risk, exit, management at lower time frame and profit target on higher time frames. Yes, that's what I do, and that's my strategy, KTS. So I capture trends on higher time frames by Ichimoku. So I look at the daily chart, 4-hour chart, 1 and 30-minute time frames, and I use Ichimoku only on these higher time frames. And I see which one is trending by Ichimoku and confirm them in mid time frames. But when it comes to taking trades, I use Bollinger Band, stochastics, and also Fibonacci lines and price actions until I set the break-even line, so that I can minimize my risk per trade in this case, in this way. I hope you get this concept. If this multiple time frame is not familiar, then this might be confusing. Sometimes you might think that the daily chart goes up, H1 going down, so what should I do? In that case, my advice is always follow the higher time frame direction. Because if the daily chart is going up and one chart going down, this might be a temporary retracement. This might be temporal, and the H1 also might start to go up along the daily chart trend. So the other question is that for example, like if daily is up, H4 down, H1 up, and M30 down, then what should I do? And my advice is follow the daily chart direction. Follow the daily chart direction. I think it's unlikely to happen by Ichimoku, like that the daily up, H4 down, H1 up, and 30 down. It's unlikely to happen by Ichimoku. But in case you see it, then I think the Kumo should be too tiny, or maybe Chikou span might be touching. So I think it's not really ideal. If you happen to these markets, then please take a screenshot and send it to me by email so that I will take a look at it. But in general, my advice is to follow the higher time frame direction. Otherwise, no trades. Or my other advice would be you look at other pair, right? You look at other pair that has more stable trends. Okay, T20 says, do the GTS members also attend Ichimoku community as part of the GTS package, and how the previous GTS students are doing in terms of the trending performance? Yeah, GTS members are GTS, so these are two separate services. So yeah, few GTS members are in the community, but not everybody, because GTS is the thing that I teach of my trading style, trading strategies. So, and also I review your trades. I review your trades, I make comments on your trades, and I track your records by tradings. And that is a GTS. By Ichimoku, I don't do this. Ichimoku community is to master Ichimoku as a system as a whole, based on the Ichimoku original books. And this is more of the community membership. But GTS is my hands-on mentoring course. So these are two separate things. Okay, so yep, sorry I got lots and lots of more questions, but this is time to end the live session today, because I will be switching to the Ichimoku membership live soon, about 7 minutes. So but anyhow, I hope you enjoyed today's live stream and talk about the stop loss and risk management. I hope you learned something new based on my trading style. So tomorrow, that will be a weekly Forex forecast. So I will cover all these pairs on the right on the weekly chart, and also commodities. I will cover gold and also crude oil, and then I will cover the indexes, and then I will cover the news, upcoming news next week. So hopefully you can join tomorrow's live stream and I will see you there. So please have a great weekend, and please take a good rest, take a good care of yourself, your family and friends, and I will see you next one. So until then, please stay healthy and stay gold. Bye for now. またね. Thank you.